Welcome everyone. Today we have our another new episode and we will discuss about similarities and difference in between NFT and blockchain technology. This is very famous also in South Asia and Asia Pacific. So we have our world famous speaker, Professor David Smith, Dr. Eric, and Mr. Philippine. So thank you for joining today's session. First, I would like to give chance our honorable speaker, Professor David Smith.
Well, Sharif, you always choose good topics, and this is another one because anytime we look at how to use money to pay for things, to exchange money for things, and as that's changing, this topic particularly works as we see it. The world has basically been most of the time on government-backed currency that had a gold or other type of reserve in place to create its value. Then that changed as we moved away from the ability to do that. But the money that is backed by the national bank is not only a way to exchange value, but also is a tool for the governments to regulate the economy of the nations and others. Uh, and so these other newer forms of money really have to act as a store of value at a meeting exchange and a unit of account. And that's what's very important as you look at these. And, you know, there has to be a widespread confidence that the money will retain its value. And even that with some national backed currency as well. I can tell you during some of my trips to Brazil, my reals went from $1 to $1 to very different categories like that. And, as I watched those I had here in Austin with me go down in value, it felt bad, but that's some of the things as you begin to work on it. Um, a major view of looking at the differences is that flat currency is any currency that is accepted in most instances issued by the government as a form of payment for paying taxes or debt. It is a legal tender that lacks intrinsic value, but in many places it's just backed by the words of the government and does not have a basis behind it of value other than the government issuing it. Uh, Flat currencies include the euro. It includes now the dollar, the pound sterlings, and others like that. Uh, Cryptocurrency is digital money that uses uh, cryptography techniques to process, approve, and secure transactions. And as it does that, it creates value that is independent of the countries in which it is issued. And that is a very, very different view of how uh, currency can be used. They Cryptocurrency is tied more to a perceived value than an actual value, with kind of the exception of the stable coin with how they begin to do it. But stable coin has its own big differences. What are some of the similarities between it? They are both used as a way to pay bills, to buy goods and services. They both serve as a store of value. Uh, and particularly in cryptocurrency, a value that has been very volatile for the last several months. They both depend on consumer trust to be accepted and used. And uh, cryptocurrencies in particular, but some of the flat currencies as well, get their values from the laws of demand and supply. And, and they're really there. There's a lot of differences between them, particularly in the like on how well they can be accepted. Most flat currencies are backed by governments, where cryptocurrencies are not, and they are decentralized. Uh, Flat currencies tend to be more stable with less volatility than cryptocurrency. The supply of cryptocurrencies can be produced is limited in supply, making it more scarce. On the other hand, governments can regulate the economy by their supply of flat currency. And Uh, Both of them have their challenges around security, transparency, and others. So to me, this is a quick introduction to kind of get you in there.
Excellent, Professor David Smith. Now I request Dr. Eric.
Yeah, so we're looking a way to capture value. So if I go, if you cook me dinner, well, I mow your lawn. Okay. The only thing that makes that worthwhile is my reputation, is the fact that I will mow your lawn. Um, you know, uh, how much is a hotel room worth? Well, how many times have people showed up at a hotel room and they said, "Sorry, we rented it to somebody else." The promise of a hotel room there and the value of that hotel room, because that value of that hotel room could have gone up and down and up and down 12 times since you made the reservation. And even though you said, we're going to reserve this hotel room at $125 a night, when you show up, they may say, sorry, we don't have a hotel room, get one somewhere else. And now all the hotel rooms are 150 or 175. So you've actually lost value. So part of the thing is, currency based on a promise and how valuable that promise is. So when you use a dollar or a euro, the government is making you a promise that will back it up. In fact, if you put it into bank, they'll even limit the risk by saying, we will insure that for you in case something happens in a bank. So there's one part of that. There's the promise. This is what we're giving you. There's the value associated by a market for what that essentially promise is worth. And then we have to look at the mechanism on how it works. The US dollar, for example, has a very intricate banking system on how these promises are moved and delivered and transferred and when the money actually goes. So when you deal with cryptocurrency, that's typically a promise based on a blockchain. Now, here's the thing that's kind of interesting when people use the blockchain. When you stake something, that promise actually can lock the money up. It's kind of like in that case, in using cryptocurrency, if you book a room, because it uses a smart contract to handle the room, that room can essentially be under an agreement where nobody else can rent that room. It's been promised, and it's been promised because this money that you had in a cryptocurrency and blockchain, that money is gone too. Once you make that deal in a crypto world, it can be, once you complete the room rental, that money goes, and there's nothing you can do about it. It's already reserved. The blockchain, if that's the way the smart contracts are made up, they don't allow that transfer. So that makes so one of the things that's quite interesting in dollars versus the cryptocurrency is this legal aspect of how it can be used. Because you could say, yeah, I'll pay you for the room. We could show up, the room might not be available, and even if I have the room, I might not pay it. I may even put it on my credit card, which is a promise of the credit card to pay, and then I don't pay my credit card. So the key is, how much is a promise made? When does that promise go into effect? How is that transfer occurred in that? And what does the market think those promises are worth? And so here's the key to me. One thing you get with cryptocurrencies is this idea of staking, putting the money and reserving it, and actually essentially locking it for real as a transaction. But also these automatic transfers. When the conditions are met, a distributed chain can move the money around as opposed to having to go through an intricate banking system. So I guess my question is, what if the U.S. created this currency called the crypto dollar? It was backed by the U.S., insured by the U.S., and it just processed through a blockchain. What happens then? You still have the confidence in the government, which is keeping the dollar about. You still have promises made, but now you have the opportunity to say, no, unless you lock that money, I'm not accepting a promise to pay unless you actually put that in the transaction. But you get the power of doing automatic transactions. So, is fiat money or dollars really that different from Ethereum coin? That's a good question.
Thank you. Mr. Philippi.
Yeah, thank you. Um, Talking about cryptocurrencies, that are on blockchains. So I'd start by making it a big difference with cryptocurrencies and stable coins. So keeping stable coins out of the equation and just talking about the differences with cryptocurrencies that are running on a blockchain versus fiat. Um, I believe almost all cryptocurrencies have a fixed amount, and our current fiat does not. So when we say that fiat is more stable and crypto is more unstable, it might be more of the graph that we're looking at that shows what stability really is. Um, for example, as a Canadian, I have all my friends telling me that fuel has gone up 50%, food has gone up 50%, everything's gone up 50%. So, geez, those darn farmers and those darn oil tycoons and those darn guys. But if you looked at a different graph and you looked at how much money was printed and what the value of that is, wow, I would think maybe our dollar just depreciated 50%. So in crypto, having a fixed amount where there's a trustless transactions and you can't change that algorithm, I would almost trust code, not almost, I would definitely trust code more than three white guys giving a little nod that says just print off more currencies. Um, so we say that crypto is unstable. If we looked at the dollar versus crypto and had Bitcoin as the average, it'd be interesting to see over the last 5 years. Has Bitcoin been unstable, or has the dollar just been printed so much that it's unstable? I have a choice of which crypto I use with my friends and family. It seems like that the fiat currencies are not voluntary. Seems like they're mandatory. Seems like there's a monopoly on them, and it seems if world and countries don't adhere to using the world currency, governments use force to back that currency. Um, the transparency we hear about, well, money can be used for bad things. Um, I would say that the fiat dollars are the most untraceable use of force, slavery, everything. I'd rather take U.S. dollars that I can't trace than a traceable cryptocurrency. Now, why would traceability be good? Where does most of our money flow right now? Through governments printing. We see a lot of money going to countries to help them be safe. We don't know where that money goes, right? That decreases our purchasing power as individuals. But I see billions or trillions, numbers you can't even fit on the screen, given for aid, and we really don't know where that end money goes. So in traceability, if you were doing something nefarious and using crypto, it would be the wrong move for you to use a cryptocurrency, because most of them are traceable. There is an exception, that there are some cryptocurrencies that are supposed to be more private and secure, that you can't see who the buyer and seller are. But I would really think that the trust level in our international global elites that we call governments, that are controlling a lot of this currency, I would love to see some transparency. You know what I mean? I don't think any of us mind paying taxes if they go to the right things. I think most of us just don't like not knowing that our money doesn't go to that that end good and go somewhere else. So the use case, I believe, for cryptocurrency are all those issues of a centralized control, use of force, not voluntary, and that's why we've seen the rise of cryptocurrencies. And to say backed by something, well, our fiat dollar, I guess it's backed by arms and in governments, but yeah, so that's my other slant on the difference of cryptos and fiat.
Thank you. Mr. Stephen.
Yeah, I totally agree with Dwayne. A statistic popped in my head. I had to look it up to make sure I got it right. But there's always attacks on cryptocurrencies by U.S. government saying they're used for money laundering and illicit activities. Well, the fact of the matter is, over 20 years ago, there was a study done to figure out how many U.S. $1 bills had cocaine on them. Would you like to take a guess at what that number is? They found 92% of $1 bills in the United States had cocaine on them. So if anybody's, currency is involved in illegal drug activity, it would be probably the U.S. government's. But when it comes down to fiat, I kind of want to approach this from a different angle. Comparing cryptocurrency and fiat is a hard thing to compare because, like Dwayne said, there's stable coins, there's backed cryptos, there's other things. And there's this notion of backed versus unbacked. But if you go back to no pun intended, if you go back to the history of monetary policy, throughout history, money was something of substance like gold or silver. And there were periods in time, there was monks throughout Europe who would help move money from place to place that would issue notes, banknotes essentially, on deposited funds. But they were trusted to make sure that for every note that they issued, there was actually silver or gold or something precious in a vault someplace in their monastery at that point. So you go through all of history, and it wasn't until probably the early 1900s where there was a drastic shift. And what happened, by the way, here's a book title that everybody should read to understand fiat monetary policy, and it'll give you a better perspective on cryptocurrency. It's called The Creature from Jekyll Island. The Creature from Jekyll Island. It's by G. Edward Griffin, and it tells the story of how this actually came to be. But after World War I, the U.S. discovered something. They said, we can't afford to keep going to war like this. This is one aspect of it, but we can't afford to come up with enough money to fund another world war. And part of the way that they got around that is figuring out a way to print more money on demand. And so slowly they took the gold backing away from the US dollar. And there's a lot of other central banking things that you'd find out in the book. They'll just make you mad probably, but but all this started eroding the value that was actually behind the currency. And then one by one, countries around the world started dropping their gold backing or their their value backing from their currencies, until you're left with a currency that, like Eric said, it's just based on good faith and trust in the government. And the way that they're kept afloat, the perceived stability, is because they are the only ones, the governments are the only ones authorized to keep printing more and more to shore up the supply, or do silly business with issuing more dollars every time a home mortgage is made. Like that creates dollars out of thin air. Every time that I take out a mortgage on my house, it instantly creates money out of thin air. It's this wild thing, this wild monetary system that if you and I were to try to do in ordinary everyday business, we would get arrested and hauled off immediately. It's so illegal, but the government does it to preserve the value, the perceived value of the currency, and help bring stability. And then you have people like Dwayne said, it depends on how you look at the charts, but they usually do the charts and say, here's the value of wax cryptocurrency or EOS or Ethereum or Bitcoin in US dollars. So you're looking at it and it looks like it's wildly fluctuating, and it is, but at the same time, the value of the US dollar is wildly fluctuating. So you almost have to step back and look at it from a different perspective and say, okay, something like silver, that in ancient times, I could, with 1 ounce of silver, buy a toga and a nice belt and some nice sandals. And with 1 ounce of silver, or sorry, 1 ounce of gold, sorry, that would be about right. And today, 1 ounce of gold, I could get a bespoke suit, nice shoes. That value has stayed the same throughout history. If you peg those charts against something more stable like that, you start to see where the true value is. So then when you come into cryptocurrency, you have to start looking around and say, okay, is there anything that is actually backed, not just backed by trust, but actually backed by real world value that we can identify that could have some price stability like that? And I won't get into all the details of stable coins and stuff, but I just wanted to bring that up because it's important to understand where this whole notion of fiat comes from. It's a newer, it is a new, I know it sounds like it's over 100 years old, but that's new in the history of the world. That's a new idea. And cryptocurrency, minting stuff, just based off of a project and saying, hey, there's 2 billion tokens, let's sell them. That's based off of the same idea of fiat. So that's a good understanding to have. I'll leave it with that. Somebody else can fill in a lot more detail than me, I'm sure.
Thank you. Excellent. Excellent, Mr. Stephen. Mr. Raymond.
Good afternoon, everybody. Yeah, it's very interesting. The moment that we find ourselves in, we've had the use of fiat for, I think the first use of money goes all the way back to Alexander the Great, who minted the first gold coin called the Lydian. And so it's not a new thing at all. It's been around for a long time. The difference between, that I see, first and foremost, the difference between fiat and crypto is this trust thing. I think over the course of 2001 here in Argentina, there was the big economic crash. 2008, the savings and loan scandal, which was a result of mismanagement from the government, in cahoots, if you like, with the central banks and the real estate companies, insurance companies, and so on and so forth. So this issue of trust is central, and I think more importantly than the question, okay, which is better, fiat currency or cryptocurrency, or versus cryptocurrency? I mean, Voltaire said, all fiat eventually returns to zero. So it's a system that is designed to reinitiate every X number of years. It's not supposed to be this everlasting means of trade. It's something that does devalue inherently. So I think this trust thing, a lot of it is solved with cryptocurrency and the blockchain technologies. I'm talking more about decentralized technologies rather than centralized technologies, and we see what's going to happen this coming month in October. Already, the government is putting in position these regulations to try and put the genie back in the bottle and say, okay, you can no longer use these applications like Cash App or difference into digital currencies, and it's going to be forced, or they're going to try and understand the reason behind that is because they're wanting to maintain a degree of control. I think it goes a little bit further than regulation, because there's certainly a lot of regulation in this market already. So we're at a very, very probably as yeah, we're at a crucial point in this moment in the game. And hand it over for now and have a think and have a listen. Thanks, Sharif.
Thank you. Mr. M.
Hi. Following what Raymond just said, I think regulation and governments trying to make it a little less comfortable to use the ground roots blockchains is because they're preparing the population to use CBDC, central bank digital currencies, which are an amalgam of fiat currencies from their bad, corrupt system that's fundamentally broken, starting with the Jekyll Island creature, which is a highly recommended book, and pretending to be a modern digital age cryptocurrency, and it might be based on some open source technology, but the crucial difference is that they are going to be able to keep on printing, even if it's digital and on the blockchain. And the problem with fiat money printing is that the governments give it to whoever they prefer. And if you're a contractor, a large contractor, and you get a project from the government, you're getting free, newly minted money that nobody worked for, and that just gets added to the economy and dilutes everyone's purchasing power. And you're getting it. And you can use it to accumulate actual assets in the real economy. And that's the unfair root evil of fiat currencies. You know, when people say money is the root of all evil, they mean fiat currency is the root of all evil, not money. And it's very frustrating because many people don't dive deep enough, and they don't have patience or time or energy to get into all the details, and they're just busy making a living and or watching Netflix. I don't know. It's that's the world we live in, and the powers that be are happy with that. That people are just running around in circles and too busy to realize where they are living in and what's the current situation. And the system is if it's not broken, it's leaning against the majority of the people, and you have to really fight back and start with your awareness of how the system is rigged and how things are working, and you have to work twice as hard as you're currently working just to try to get out of this just a bad situation we're all in without realizing it. Sorry. I didn't mean to be so dark.
Okay, thank you, sir. Mr. David Smith, an interesting aspect actually come from different people's historical backgrounds and applications and many more things. So, how we can develop better strategy for financial transactions, especially what type of model actually good for, I want to say, developing nations.
Well, part of the answer to your question, Sharif, depends on what the policies are at the developing nation and how much the government wants to use monetary policy as a way to regulate the economy. And that's one of the primary advantages of fiat money, is that it gives the government control of the economy through its central bank. And yes, we're beginning to see some central banks begin to release their own cryptocurrency. and that's probably a trend that will continue more in the future. But by doing that, the government can manage the economy through a monetary policy. Some of the monetarists, like Milt Friedman, have argued that variations in money supply have very, very significant influence on price levels over long periods, as well as the economy output in the uh, short term and long term as well. You see that you can use monetary policy to manage inflation, to manage prices, and we saw this in many, many different places. Uh, During the Great Depression, others looked at how to use monetary policy during that. We've seen during the last 15 years the United States dramatically using monetary policy. We've seen in Brazil. Uh, a lot of places where monetary policy has been used to control the economy in Brazil. And we saw that, for example, some of the countries that actively use monetary policy in times of recession and depression and others have recovered more rapidly than those that did not. Uh, and on the other hand, we're seeing cryptocurrency being put in place as a more uh, universal item of exchange. We're seeing cryptocurrency, particularly as many in the world post COVID are giving up using physical cash, uh, being used to become something that is easier to handle than what we can do today with our fiat money. Um, I'll tell you, I have rarely used cash in the last year and prefer to use actually credit cards more as a way to pay for my transaction, but that is still coming off of fiat money as the exchange mechanism. But you begin to see that going on all in all. And the speakers are right. Both cryptocurrency and fiat money has a risk of losing its value based on inflation, based on global events, uh, and the other elements that go with it. And that we also can go back and say that, for example, in the United States back in 2007, we had a mortgage crisis. Many academicians believe that the monetary crisis then was fueled by the US central bank trying to manage the mortgage industry, and that the swings in that created that crisis of the 2007 financial crisis. And that, so, both of them have their own challenges, but I truly believe that in the next decade, most major governments will have a cryptocurrency associated with the government. In many instances, they will probably coexist with a fiat currency as well, and you'll have a hybrid approach. The other thing I think as you look at it, though, and this is where it will particularly hit the developing countries that you mentioned, Sharif, is that the ability for them to make money rapidly available to the citizens and to the country and to the businesses that are in the country will probably be better served over the long term by the hybrid approach of fiat money and cryptocurrency than it being one-sided to either one. And so that's my thoughts on the answer to your question.
Thank you, Dr. Eric.
So, we've talked a lot about governing policy and the ability to impact things. So, how much do you trust the government to make decisions? Obviously, some things have gone really well and some things haven't. So, policy is one of the drivers. The second is, how do you distribute all that? What is the distribution method here? And the key is banks and other institutions are actually doing a lot to manage the economy on their own, independent of government. And let me give you an example of that. Is I want to go do business in Bangladesh, but I'm worried about how how my risk is going to be because of the exchange rate. So the banks do a deal where they lock in that future exchange rate, that when the money, they get a loan and the money paid back in 10 years or 5 years or a year from now is already locked in. So there's already banks struggling to make these deals on the future value of money, because otherwise, how do you do a 5-year business deal when you're going across currency? So the banks are doing a lot to go ahead and move that. Then there's the things banks do in making money available. So the money essentially gives it to banks at a certain rate, which then they pass on to the consumer and they control the rate. Well, what happens if we say, I've got some money I'm not using right now, I'm going to make that available to people who want it. And by the way, once I put that money in, I can't use it. I'm saying other people can use it for a limited term. Now I'm doing that future kind of thing. So is it better that you and I can do that, or that the banks do that? I don't know, but it's happening right now. There's a lot of these forces on the exchange, and then all of a sudden there's these markets. And one of the biggest problems with cryptocurrencies, it's just not understood by most of us. We think that it's as wildly, the dollar is this real thing and this crypto is this other thing, and we get excited about it and we get pessimistic about it. The same thing happened in the dollar. There have been big runs where the dollar, we've lost faith in our government currency, and also using wheelbarrows to go pay for things. The same thing happens when people go, oh, cryptocurrency, it must be worth a lot. I hear people making money. I'm all in. And then the market crashes based on hype curves. So you have to be very careful about these hype curves on any currency, because that can be damaging. But one of the real key here is, what if the World Talent Economic Forum trusts in what it does, and we all form this currency and we do equivalent values and we're passing that on? Okay, so that's one share of confidence that we have in ourselves. Let's say we believe in enough in ourselves in doing that we're willing to put some of our assets in that. Well, then we have to come up with that policy of, what is the inflation rate curve? Because we can put all that things in there. We can actually not let the economy do it. We can say, here's how much of our world trade WTEF coin is going to be available over time. We can go, but that means the policy. So how do we as a group come up with a policy of our own trust? That's the big thing. You have to have some way of coming up with that consensus, because now we're not only talking about the coin. World Talent Economic Forum has maybe the block. If we're using our own, we can actually control that whole distribution system. And do you have a trust in something that you have a say in? Well, then you have to look and say, how much do I believe in that process? Is that fair? Do I trust us enough that the methodology we're using to make those decisions? So we find another organization, let's say the World Talent Economic Forum, works with the universities, and the universities form their education coin, and they believe in themselves enough to have that thing. Well, then we start looking at, well, what is the rate of trust between the World Talent Economic Forum and the academic forum? And then gamers, group of games, form their own coin, and they believe in themselves enough. Well, what is the level of trust between the academic coin and the WTF coin and this and the dollar? It really has a real challenge of people able to form links of trust that have to interact with other trusts, which then have to interact with the trust in the governments. And the fact that you can have your own exchange markets, your own loaning markets. I think that's interesting. So one thing is this: how do you roll policy? How do you roll distribution? And then the other thing is, how do you roll these markets? Because people like to control markets. Once you understand a market, you can manipulate it, whether it's gold, diamond, silver, agricultural. Once you understand it, you can manipulate these markets. So who's going to set up these markets where all these things are traded? That is an interesting challenge also.
Thank you, Mr. Philippi.
Yeah, all great points. The policy of trust. If you look at Bitcoin, we have a trustless scenario. We see that there's an algorithm, there's a fixed amount, and we can all predict the inflation. We can see how much is printed and when it's done, right? So the very first simplest form of crypto. Now, when it gets a little bit more confusing, is what if there needs to be an update to that code? What if something needs to change? What if what if we're looking at a different currency? I would present that for these new cryptocurrencies or fiat or these government cryptos or CDCs, you could have a cryptocurrency, and we've seen it in the past, that is controlled by a few that might not represent the rest of us. So this is more of a question and not an answer. But the hope of this cryptocurrencies is that it is trustless. We believe in the algorithm. But when it gets to that second level of governance, we have to look a little deeper at some of these cryptocurrency coins and make sure that we trust either that code, and if that code has the option of being updated, or the inflation can be updated, who are the decision makers? So we are faced with the same problems of fiat. Personally, I don't trust the government to manage these, our fiat currencies. We can see it's not in the best interest of the citizens and the normal people. The distribution is not fair. And the amount of tax for me to just get a little bit more to meet my month end, there's these loan sharks in the middle, and these loan sharks have become so big that there's international loan sharks of whole countries that say, well, you need a little bit more to get to the end of the month. Well, you can't pay. We'll just take your assets. So if you look worldwide, we're in a crunch. I guess I feel a lot better, I guess, maybe if we were this little table, we could feel proud if we were the global elite, just making sure all the markets could crash down, that nobody else had liquidity, and we could have our almighty dollar that we print to buy up all the assets cheap and sell high, right? Isn't that the trading motto? Just buy low, sell high. So it's been said, the system's broken. Crypto has a hope because the first iteration has a code that hasn't been broken and is still working to this day that we can trust, and it's predictable. We do have to be aware when we can have people in charge of that code of how we govern that. How do we have a say as an individual, as a small community, like Eric mentioned, maybe our own little cryptocurrency for the World Talent Economic Forum? Who's in charge then? And if you're just going to give me the power to be in charge, maybe I just get greedy and become a bad actor and take all the funds, right? So it starts going down into governance and how we have a true representation. And without education, like Amy said, without education and us taking some responsibility, this problem isn't going to be fixed. So we do have new tools in front of us. I don't know the numbers, but I probably think there's 99% of us in the same boat, where we do have to work harder just to get goods. We have this dollar in between what used to be, I have this skill and I need this good. And now we can't even get the good, and I have to get more skills and don't have enough time. I only have 24 hours in a day to extract value to try and get that good. So we can't all try and predict our own value and do the barters. That's why this currency came, started. So we have challenges, but I think there's hope because there's been enough proof that people do find this valuable, transparency and trustless networks. We do have enough education and free will to come together to have and show value in a project. And this interesting thing about network effect, if enough of us feel the same and share this currency, it grows. And that was the most enlightening part of this cryptocurrency journey that I've taken, is that a fair distribution and a wide distribution and people using it create the value. And if we can just see that we have that power, I believe we can create a new world. And all the rules and guns, you can't kill us all at once. And if you want to, well, hey, fine. But there is hope. And the hope is not giving the government a digital tool just to print digital dollars to keep us all enslaved in the same way. And thank you.
I don't know where Sharif went, but I had a quick question. This is Mark, and I pop in, part of the Pod TV crew and all of that. But I've been hearing a lot of my friends talking about getting cryptocurrencies and all along those lines. And it does sound like, as I've heard some people talking about, that a number of organizations, I've got a friend that actually has a Black Business Olympics, which is basically a Black Business Expo that he does bi-monthly and everything. And they've been talking about getting a currency for that organization. And I'm also working for a nonprofit, a cultural nonprofit. And I know there's been some talk about getting a coin for that as well. And I guess the question that I asked, which I also had asked in chat, was if everybody has a cryptocurrency, where is the value in the cryptocurrency? And do we run into a danger of there being too many cryptocurrencies? Because I know that even El Salvador, I think it recognized cryptocurrency as its main form of commerce and all along those lines. But I do sometimes wonder, are we going to get to a point where maybe we have too many folks that have these various cryptocurrencies? And I am in the arts, so I love the idea of decentralization and the artists and others having the ability to be in control to some degree. But I guess my fear is what happens if we have too many. And if anybody has an answer for that we can share with our audience, I would love to hear it, because that's where I get concerned when you go around and everybody's going like, I'm going to get my own cryptocurrency. I'm going to get my own cryptocurrency. I'm going to get mine. And then I'm going like, well, will you be able to pay rent with that? Will you be able to pay with anything at a restaurant with that? And all along those lines. So if anybody that's in that space can answer me, I would love to hear it, because if I can get my own coin and I can go down to my, I live in an apartment complex, and I can go to my apartment and present them the cryptocurrency to pay the bill next month, because, I've already paid for this month. I would love that, but I just don't know that it's realistic in this particular time.
Excellent. Mr. Steven.
Yeah, I'll speak to that question real quick too. Is that I think there probably at some point are too many cryptocurrencies out there, but the markets, the free markets, the exchange of them will help ground them and figure out, sort through them, figure out which ones are the ones that are actually valuable to the community. So, a nonprofit could have their own cryptocurrency. Anybody can, I could, in 5 minutes spin one up, but it's only as good as its utility and the trust in that organization. So as soon as it doesn't have utility, it becomes useless, and it's going to go to the wayside. People aren't going to use it. So I think that's going to help weed things out. Speaking to the utility of it, Eric had mentioned one thing about wheelbarrows, bringing wheelbarrows of stuff to pay for things. That actually comes from the Weimar Republic in 1921 to 1923. Their entire monetary system was collapsing. And I was going to show you a picture, but just search for woman burning currency, Germany. You'll find it. It's crazy. They would bring wheelbarrows of Deutschmarks to pay for a loaf of bread in the morning, and by evening it was 2 wheelbarrows full. And so the only thing that this stuff was good for was to throw in the furnace and burn. And the problem is that whoever controls the money controls everything. And as long as people don't have a choice, they're inevitably at some point with fiat-based currencies, they're going to be left holding onto the bag of useless cash and using it to, power their furnace. I remember my brother came back from a trip to Ecuador and gave me a strap of bills, like fresh from the bank, and it was worth 10 cents. And this was right before they repegged their money to the US dollar because it's more stable. Well, it helps, but only for the time being. So speaking to Dr. Sharif's question about, what do you do? How do you encourage this in a country? I think there's three main things. First thing is you have to maintain the right of people to choose. If it's taken away, the house of cards, it's all done. And you are forced to use the fiat currency of the government, whether it's a cryptocurrency that they mint or just the fiat currency that they already have, the legal tender. But as long as people have a choice, they have a voice. Got to remember that. And if you can make sure that the government allows people to have a choice, then we'll be good. The second thing is to educate people on, and Dwayne was talking about this, on which ones are actually trustworthy, what makes them trustworthy, what makes them stable, what makes it that this is a good store of value that won't turn into a wheelbarrow full of useless paper. So educating people on how that works, and it's not just all cryptocurrencies are great. Some of them are great, some of them are trash. So you have to be very careful which ones. So maintain the right to choose, educate, and then the third one ties back into the trust, is help establish systems that somehow guarantee that the value of these currencies are going to stick around. And one of the things that we do at LD2, we've set up the LD2 protocol. You can check it out at ld2coin.io. Wrote this white paper talking about how you can use, in this trustless system, you can use 3 independent parties who have interest in making sure that the value stays there, but their motivation for making the value stay there is completely different. One of them wants to maintain face as an accredited accounting firm, so they're not going to bungle the account audits. The other one is a depository responsible for providing silver to the U.S. Mint. They are not going to screw up their contracts. They're not going to risk it. And then the issuer, once those two approve, the issuer can actually issue the tokens on the network, and the smart contracts guarantee that you cannot issue more than the other two say. So it puts this balance of power. And whether it's the LD2 protocol or some other system that you come up with, we have to have systems of governance in place to make sure that the value stays there. Otherwise, it's a fruitless expedition. So,
just really quickly, said another thought that crossed my mind is, I'd just love to hear folks' thoughts about this, is definitely when I think of cryptocurrency and this whole decentralization, and like I said, I love the idea and everything, it does sound like we are to some degree going back to a barter system and all along those lines, or at least it helped improve the barter system. And the barter system did have its good qualities. Like I said, if I needed bread from David and I had some butter, and maybe he wanted to butter that bread and everything, we could make that trade and all along those lines. But we also have to be honest, it had some problems as well, because also out of the barter system came the notion of sharecropping, and sharecropping was one that is an unfair variation of bartering, because you wind up getting pressed into a debt that you cannot get out of, and all along those lines. So I was just wondering, is there some comparisons between cryptocurrency and what we're talking about and barter, and do we run into some of those risks where there might be some unfairnesses and people getting buried in debt that they can't get out of? Not that the dollar isn't already having that happen with credit debt and all of that, but I'm just wondering thoughts around that also from anybody here on the panel.
Raymond or Ami, thoughts?
With regards to debt, well, I live here in Argentina. We have like around 47% of the population on the poverty line. A lot of the middle classes ended up in the lower classes. Well, I don't want to say lower, poor, or anything like that, but in the lower economic groups as a result of the 2001 economic crash, where people did have to revert to bartering. A friend of mine, he remembers trading comic books for onions. There are statues all over the city in Buenos Aires that have no plaque. Nobody knows who any of the people are that are in these statues, because all the brass plaques were taken because cash equals trash at the end of the day, and people will revert to semi-precious as a means. Um, the melting city. When I was finding coins,
Mr. Raymond, can you hear me? I think we cannot hear him clearly. I'm sorry about that.
Yeah.
I
I
think it's
can
related to internet problem.
continue or try to answer Mark regarding too many coins and risking some of them going to zero because nobody is interested in them. Think of the recent history where you had some remote islands in the ocean, and people were trading with whatever currency they had, like I don't know, some special kinds of stones or something that was rare relatively in their world, and then suddenly being connected to the international trade, around the world, and nobody's interested in their shiny coins or stones, and they have to get gold or barter with their produce and get paid in gold, and gradually that replaces their local currency, which is not something that's worthwhile in the larger economy. And that's how they assimilate into the rest of the economic world. And their local currency might have some nostalgic value, or it just has some value, but it keeps depreciating and it's only local. Um, so something similar can happen with cryptocurrencies because it's really easy to make new coins and just try to convince people to use them. But you have to have a network effect where a lot of people are interested in the coin, and that gives it value. Another thing I wanted to talk about was the difference between fiat currencies and the old promise-based contracts and the new cryptocurrencies with smart contracts. And the difference is very important to understand. The old system is based on promises. There's a Seinfeld episode where he's frustrated with this car rental because he lands with his in a plane, and he gets to a new city and he says, I have a reservation for a car. And the woman at the counter says, yeah, I see it on my computer. You did have a reservation and I took your reservation, but I cannot provide you with a car. That's the promise-based contract system that we have today. And with cryptocurrencies, there's a different system. It's called smart contracts, and it's all based on code. And if you promise someone that you're going to pay them, you have to lock the amount of money beforehand in the contract to make it valid. And then the contract only checks the conditions and knows if to release the funds to the person who was promised the funds, or release it back to the person that provided the funds to the smart contract. And it's a very different system than the current system we have, and it took me a while to understand it because it doesn't make sense. How come I mean, where do I get the money to start the whole transaction? If I have the money, then maybe I don't need to transact, but it's fundamentally very different than the promise-based system we have. And it's a funny episode with Seinfeld that explains the concept of how bad the promise-based economy works. And Eric, that ties into something you said about banks manipulating the exchange rate. And how can they do that? They can do that if they have free money that they can inject into the system at will, and maybe it's not exactly the banks that can do it. They need to get approval from the Federal Reserve. I'm not an expert on how the details of the system work, but I get a sense that the difference is it's like in physics where you have conservation of mass or conservation of energy or conservation of both of them together. That's how cryptocurrencies work. And with fiat, you don't have that. It's like a magical open system, but there's some privileged people or organizations that can inject new money out of thin air into the system and make everything work and fix everything. And it's very corrupt and very unfair. And again, people are not aware of that, and they don't know how it works. Back to you, Dr. Sharif.
Can you hear me?
We can now.
Okay. Professor David Smith, what's your concluding remarks for today's session?
This has been a very good session, Sharif. I love the diversity of opinions, and I love the fact that we're talking about what's current and what's going to happen in the future. A couple of the differences, just to summarize, is that fiat currencies typically are backed by governments, and cryptocurrencies are decentralized and governed by a consensus method. And as was said, many of them are smart contracts, but we're even seeing that change as we begin to see cryptocurrencies backed by governments beginning to pop up around the world. Fiat currencies require something like a bank to be able to clear them and move value around. Cryptocurrencies are peer-to-peer type transactions, most of them built upon the blockchain. Most fiat currencies can exist both electronically and in a physical form, where crypto tends to be digitally only. In many nations, fiat technologies are the only legal tender, because cryptocurrency is not legalized by many governments yet as a legal tender currency. And one of the things that is kind of interesting, and this one's changing again too, is fiat transactions can tend to be easily reversed, where crypto currencies, particularly built upon blockchain, tend to be harder to reverse. And we see those as some of the characteristics. Now, as I said earlier, I think you're going to see more and more nation states begin to adopt cryptocurrencies as part of their monetary strategy, and that fiat currencies and cryptocurrencies will coexist for a while, particularly if it is the nation state that issues the cryptocurrency. But it's one where we are in a time of change that is going to be helping pick winners and losers as we come up on the future. And it's one that is worthy of staying close to and following as it goes forward. So, Sharif, thank you.
Thank you. Dr. Eric.
Yeah, so our banking system and
Mr. Eric,
our finance system under fiat is incredibly complex, which gives it a lot of power. Sometimes we don't use that power correctly. People in that make bad decisions. and bad things happen. Sometimes they make good things happen. But the biggest challenge with a complex system is that those who understand it can dominate it and take advantage of it and get actually more power by being able to, I can get money, loan it again, reloan it, and make tons of money. Is that fair? Some of the holes that are in the system, people don't even know. Things that happen in the system are such that if you tried to do these things in business, you would be jailed. So there's a lot going on there that, because it's so complex, we don't understand. On the other hand, crypto can be pretty easy to understand and very transparent, but it doesn't necessarily have the power. Things like risk adverse. Also, it has the advantage of being legally simple. When a transaction happens, it happens. If you make promises, they're coded. I think the real key here is, I agree with David, there's going to be a balance, and I think banking fiat can use a lot of the advantages that a blockchain crypto has. The key is that I think we're still trying to figure out is how to transparently measure and understand trust between all these groups that are building trust. The real key that's going to break the logjam here is when we understand how to go between all these different things and pick things. When that becomes transparent, I think the world will be a lot better place.
Thank you, Mr. Philippi.
Yeah, the point of so many cryptos, it's and like Eric just said, the complexity of even fiat, right? So I guess the challenge would be for people to put one foot into this new world and understand what the responsibilities are for yourself. There's a learning curve, because you're not trusting this third party that's supposedly looking after your fiat money. You become your own bank. And then with all these different cryptocurrencies, where do you start? So I've been very involved in something called, now it's called Antelope, and it's a source code where that's born a few different cryptocurrencies, and a few of those are called EOS, WAX, and Telos. And I've seen this community struggle with a centralized body that was, had a lot of promises. And I see that it's kind of battle tested. It's been around since 2018. So it's just one of the few that I know about. I can't speak to all the other currencies, because this is the community I'm part of. But I guess I would urge you to look into those for a few reasons. It's been around and battle tested. The community has risen up and taken over the whole network, and has learned from a lot of the mistakes that's happened. How do you trust the people running this blockchain? How do you deal with things that are outside of your control? We hear of hacks and rug pulls and things like that. So yeah, I guess the first step, like all of us took, was that kind of tense spot of, I don't know what this is, and just risk a little bit of your normal fiat money. It's depreciating anyways, right? So put a little bit in and make some mistakes, learn about it, and see which one of these communities resonates with you. And yeah, without us learning and taking those risks and educating ourselves, no one else is going to do that for us. So yeah, there you go. Thank you so much, Dr. Sharif.
Stephen.
Yeah. I just want to quick make a point of clarification. There's a few different definitions to the word fiat. One that has been talked about a few times on this is that it's issued by some legislative act or by a government. And that is one of the definitions. But the larger definition is fiat money is money that is not backed by anything. There's no commodity attached to it. And so there's no long-term stable value. And when you think of that, I mean, that's really the thing that matters, that because people want money that has value, that doesn't get eroded over time. So when you think of it like that, 95% or more of cryptocurrencies are fiat. They absolutely are fiat. They're not backed by anything. They're not attached to anything. It's all perceived value. Some of it's good perception. Some of it's not. And even when you get to the stable coins like Tether, that's fiat. It's still, they call it a stable coin, but it's only stable as pegged to the fiat. What I would love to see is a transition where we bring real value to the blockchain and attach actual real world assets to things. And that's one of the things we're doing with LD2 is we're bringing real life silver onto the blockchain and making stable tokens, bringing this value and trying to get rid of the notion of even having fiat currency anywhere on the blockchain, because we can copy what the governments do and just give more people a choice. But if we're giving them a choice to an unbacked currency, that's not really a great choice. We need to have something that's attached to governance and attached to real world value, something that you can, really stake a claim on and know that it's not going to erode in value over time. So just wanted to put that out there, but thanks for having me.
Thank you, Mr. Ami.
Yeah, I like the whole messiness of the whole situation we're in. It's very new. It's very new, and things are moving fast. And I think what blockchains will bring to the world economy is the value will be in the blockchain itself, because you can use that blockchain to document and have smart contracts where you have business deals on the blockchain, and that brings value. And the token is just there, and you can use it as a means of exchange, or you can use a stable token that's on top of the blockchain in a different layer, a higher layer. But I think the blockchains that are going to be used and are going to be popular and resilient and can handle capacity are going to be useful and valuable because of that, just in itself. And Dwayne, I also follow and like Antelope, and I'm interested in using that as a base layer for just regular websites and storing the data in a private copy of that version of a blockchain instead of a database. I think it's very secure, inherently cyber protected, and it's very different than a regular database. And that's my take on Antelope. That's how I use it. So thank you, Dr. Sharif. Oh, we lost him. Raymond, I think you're next.
Thanks, mate. Welcome back, Sharif. Just first and foremost, thanks to everybody on the panel. I've really enjoyed listening to everybody's perspectives. Certainly, it's always nice to get new information about what is developing. It's a really like, we're not going to rush out and buy wheelbarrows this year on the hope of making some sales, Eric. But the interesting thing with the space we're in right now, we can't Google this. All right, we're in, this is the Wild West, and we look at what has happened with our economic system over the last few hundred years. They've done the best that they can to be able to regulate and protect it and make it work with Basel II and all these different organizations, the World Monetary Fund. But they're making it up as they go as well, and people forget that. I've had a conversation with the ex-secretary to the Minister of Finance in Argentina, who was the gentleman responsible for brokering the deal of paying back the debt that Argentina had with the US or the World Bank. And I was like, what's the plan here? He goes, it'll work itself out. Nobody really knows what's going to happen. I mean, we use these different instruments to the best of our ability. Here in Argentina, they don't work. The most stringent ones don't work. Why? Because we have two currencies operating, two fiat currencies operating, the US dollar and the Argentine peso. So I really like what Stephen was saying. I totally agree that it's all about value, trust, and education first and foremost. I mean, Salvador is a classic example of the government trying to introduce something with zero education, people taking their Bitcoin and queuing up outside on the street so they can exchange it for Salvadorian pesos or pebbles, whatever they use there. Right. So I think what is really, really important moving forward and how I see blockchain helping is this the governance of these new systems that we're starting to incorporate. So this governance is going to help with the regulations. There are regulated systems already in place. The gold standard bank, they've only been around for a little more than 10 years. They're the world's first decentralized regulated bank. They've already got within their ecosystem their own internal stablecoin within their own metaverse. They're already working on a stablecoin in conjunction with the Swiss franc. They already have a stablecoin called the G Euro, and within the system as well, they have a utility or a gas coin called the G999, which is used to move everything within this entire ecosystem, which is huge. Everything from telecommunications, electric cars, tokenized real estate. So these systems are already in place and regulated. I think that the chairman of the Gold Standard Bank is already an invited guest at the G summits, the G10 summits, and so forth. So this is a highly, highly regulated market, and it's going to be, as we all understand, utility is going to be the winner in the end. Okay, he who has the most utility in their blockchain is going to be who wins. So I'd say definitely look into the G999 main.net blockchain. There's some serious hitters back there, not least of which recently they partnered with BD Swiss, who again has only been around for 10 years. It's the Wild West. Everybody is sort of jockeying for position. Governance is going to be key. It's got to be all about the people. We have to be about, holding on to more of what's already ours, maintaining sovereignty. I find it's really, really exciting time. So thank you very much, Sharif, for the invitation, and thanks again, gentlemen.
Thank you. This is excellent discussions. I believe that it will be really helpful for our audience. So I request all of our audience, please share our content as much as possible with the government agency, corporation, and academy. Thank you, Professor David Smith, Dr. Eric, Mr. Philippi, Mr. Stephen, Mr. Amy, and Mr. Ramon for your continuous support for World Talent Economy Forum. Thank you. Bye-bye and take care.
I love the car horns in the background. Commerce.